Welcome, ladies and gentlemen. My name is Brad Matheny. Today is the 14th of July, and this is my continuation of the Plan Your Trade video moving into next week. Now, you can see from my deeper research here, there we go to weekly, that I believe we're still in a very strong wave three formation. So here's the move. I know this is a lot of crud on this chart. I'll try to explain this to you on another chart, but I believe we've seen a move up to wave A, into wave B, now moving into wave C. And I believe we've had a 1, 2, and moving into a wave 3 pattern of wave C. Now understand, could be a very long term pattern. And when I say a very long-term pattern, I want you to understand if my analysis is correct, and let's do this so you can see it a little differently. So here's a blank chart, the SPX. I haven't drawn too much on this. So really what we're looking at here is a major bottom here, moving up to A, moving down to B, and then eventually, ladies and gentlemen, moving into a C pattern, which is, whoa, not there, which is likely going to be very extended. And when I say very extended, I'm talking about the potential for this C pattern to be a very aggressive move, possibly accelerating up into that format. Then maybe seeing some sort of a pullback, possibly deep pullback, maybe into this area, then moving into an E pattern to move higher. So I see really a lot of upward growth in the market. And, everybody who's using Elliott Wave is going to come out and tell me I'm wrong. And they're all welcome to their opinion. But I put an article out, a video out a month and a half ago saying that the SPY was going to go to 606 and then 735. I put a comment out 4 months ago saying that the markets were going to rally potentially double between now and 2029, 2030. I've been putting research out for the last 3 years, basically saying that this is going to be the greatest opportunity of your lifetime. And that's because I believe the markets have a very strong potential to move. And I'm just going to, doing it again, to move into an excessive trend. Okay, I'm going to do it here so you guys can see. So we're going to come here, take a look up to here. This is our leg. Let's call this our base leg. It's really taking a look at these highs pre-COVID to these lows down here in 2009. Well, that's all I'm measuring right here, trying to measure this leg. Okay, now this leg, and I can do this differently. I can measure it with the extension coming down to this area, up to this area, and then come down here to the COVID collapse. Okay, we've just now rallied above the 1% level. We're targeting this six, and this is going to be 6109. Okay, which is going to be close to 610, 608 on the SPY. And then, like I told you, we could move easily up into this 2 level. Notice how I've drawn this almost perfectly right at 2, pulling all the way back into support between this level here, 1.382 roughly, and 30, and then rallying back up to 2.5 or above. Now, this would give us another Fibonacci move. So you have to understand that, we could measure from this low here up to this level, come down to here, measuring Fibonacci on the way up. And hypothetically, if my analysis is correct, from this level up to this potential level, from this level up to potentially my high level, down to the pullback level, sets up another target. So now when we look at this, ladies and gentlemen, here's my drawing. So we have a look at this. visual order, bring to front, visual order, bring to front once I can get to it. And over here, visual order, bring to front. So close. There we go. Okay, so now assume I am correct, and I'll get into the details of what I really wanted to talk to you about here in 2 seconds. But assuming I am correct, look at these moves. So we move up here to the 1.5 level or 2.0 level. That puts us at 606 roughly on the SPY. And remember, this is 606 and this is 2.0. Look at that. Really amazing. 735. Okay, so how am I able to do this? Well, I'm teaching you 1.5 level right here, 606, and this level here, 2.0 is 735. That's the S&P equivalent of this SPX chart. Now we look over here at the same levels. Then that puts us up over here at roughly 8, let's call it 815. And then we have the same thing here at the 1.5 level is that's going to be roughly 702. Okay, and then let's look at the next 1.5 and 2.0 levels. And that moves us up here to 1.5 is going to be here. That's 11,540. So I'm going to guess that that's going to put the SPY maybe at 11,000, call it 25. And then, whoops, come over here. The 2.0 level puts us at 13,315. So I'm going to pick this as maybe 13, let's just call it 15. So, given where we're at, if my expectations play out, the next leg, if it is equal to this leg at 1.0, would mean that the NASDAQ or the SPY would rally to 900, roughly 940. Okay. And that is our immediate upside target based on a simple Fibonacci level, this 940 area, right up into this area, maybe up into this 1.5 area up here, and possibly even much higher. So now what we need to see here is how big and how extended this wave 3 rally is. And that's what I want to talk to you guys about today. So today in my research, let's go back over here to the SPY and go back to daily. This is all related to the SPY cycle pattern research that I've been doing. Auto scale, drag, oops, drawing, drag over here. Oh, come on. Okay, so now what we're going to do is we're going to spread all this out. And in reality, ladies and gentlemen, this is what I want to try to teach you. My analysis, my expectation, and I posted another video earlier, so I'm going to get rid of these lines. Try to get rid of these lines, the ones that I want to get rid of. Okay, good. I can leave those. So if I had to draw these over again, given what I know right now, I would make them a little bit different. And I'll probably go back and do that on that SPX chart. But what I know right now, I'm going to show you is that my analysis, my data has shown that the markets have moved into a new phase. And I'm calling it a broad sector valuation appreciation phase. And it really comes down to the fact that we're seeing broad sector movement in various ignored, undervalued sectors. Now, this is RSP, the Invesco S&P 500 equal weight shares. And I'm highlighting this because I want you to see this big breakaway. It took place Wednesday, Thursday, Friday. Huge upside move. And this is in the equal weight SPY. So understand now that we are now ignoring the heavy, tech heavy, and the leaders. This is the entire market is now moving equal weight aggressively higher, trying to get above this level right here, which is still very critical. If we're able to clear that level, okay, in the next, call it, week or so, very likely we're going to see it move up to this 184 level, 184, 183.50. And that's going to be essentially a 8.5%, 9% move. Now, an 8.5%, 9% move in the general SPY would put us at, and again, let's come back over here. An 8.5% to 9% move in the SPY would put us where, Brad? Obviously, we just draw a line to figure it out. That's 4, 5, 6, 7. There you go. 8.5%, 9%. Look at that. 610, 611. So let's call that my 606 number. That's my prediction, was it was going to go to 606, then stall, then rally beyond. And I think what we're looking at, ladies and gentlemen, is a very solid move to the upside, as long as this reflation trade, which is showing up on all of my indexes, this is the best example I found so far. As long as this reflation trade continues to move higher. Now, we might be able to see it in other things like VTI. Nope, it's kind of moving higher. What else could we look at? VOO, Vanguard, S&P 500 is moving. You might be able to see it in the ARK funds. Well, you got the breakaway in the ARK funds, ARKQ. There's a pretty good example. Okay, so here's an example of a good solid breakaway. You notice how we've gotten outside of this flagging. So here's the flag, the purple flag, coming into apexing. We've got an A, B, C, D, looking for this breakout up into this area. Big solid breakout. As this builds momentum, as this, what I'm calling broad sector rally, builds momentum, you're going to see capital chasing this move considerably higher. And I think as long as demand for the US dollar, strong US economy, and the fact that the capital shift now is driving these broad sector rallies, and again, we might be able to see it in things like Ford. Yep, there we go. Ford's beautiful example of a move. We called it way back over here of a 17% chance up here, but here's a perfect example of an undervalued stock that's just taking off. Okay. And what's happening here is these undervalued and ignored stocks have a chance of doubling or tripling. Let's take a look over here at General Motors. Same thing. What's going on here in General Motors is that these undervalued and ignored stocks, whoops, are starting to come to life. They really are. And you're going to find this in all types of sectors. Okay. One of the other ones that was on my list was Fox A. There you go. Weekly big solid breakout. You can see the flagging coming across here. Very clean, solid breakout. Needed to get above this level, which was a solid resistance zone with double rejection here and here. We're above it. You know, how high can we go? Well, how high could we go? If this is a broad market rally across various sectors, undervalued, ignored, you name it, we could see this entire thing really start to rocket and maybe last all the way into 2025 and 2026. So now let's take a look at something that are pretty well ignored, the marijuana sector. Okay, do we have any real breakout? Let's try to auto scale. Nope, nothing here. Let's take a look at alternative. Uh, alternative. Well, let's take a look at hail. There you go. Look at this. I'll clear these. There's your big breakout. Smart mobility index, big volume. Now look here. I add volume. Yep. Here comes my other indicators. Big dip, big bottom. This is weekly. How high can this go? This can go quite a bit higher. This can go quite a bit higher, guys. How high can this go? From 30 up into 60, maybe. That's 100% move. Okay. Let's take a look at 10. Okay, basing, bottoming, got to clear some drawings. Not really showing the type of move I'm looking for, but still could rally considerably up into this area, which is a 94% move. Um, and I could go through lots of symbols. It's literally showing up everywhere right now. So if I could redraw the SPY cycle patterns to try to tell you what I think is going to happen this week, we're still going to get the rotation. I'm going to come in here, auto scale, spread out, and we're still going to get the rotation. We're still going to get the trending. But what I think is really going to happen here, folks, is you're going to see this move up into Monday, and then you're going to see it move up into Tuesday, maybe even higher than that. Then you're going to see a stalling into Wednesday. Then you may see a bit of a price collapse into Thursday. Then I think we're going to rotate into a narrow range. And I think we're going to see some pretty solid upward melt up as we get deeper and deeper into earnings, possibly moving into some sort of a big move here. So now, why is that? Because we're seeing really organic growth across various sectors. This is no longer a dead cat bounce, ladies and gentlemen. This is a very solid, looks to be a very solid upward trending channel that is now driving potential upward growth up in this area. So understand it up in this area here. This is kind of what I think is going to be the case. And I think it's because, again, RSP, take a look at RSP. This is a very clean indication that we're now seeing broad sector appreciation. And that means that if it sticks, the US market could reflate 9 to 14% very cleanly between now and the first quarter of 2026. Okay. Go back to the SPX and I will leave you with this chart. Remember, I'm still not changing my cycle pattern analysis. I consider that cheating. I am just revising, which is what all traders should do based on new information, which is related to that broad market rally participation kicking into gear. So I think we're going to see a pretty broad melt up taking place over the next 2 or 3 weeks. Okay, guys, more later.